It's been over 2 months since I kicked off my Robinhood stock options challenge, where I attempt to take my account, which hit a low of $364 in November, and trade my way to $100,000. Certainly not an easy task, but I enjoy a good challenge. And just a reminder that this is purely for your own entertainment. In general, this is not a good way to trade or manage your bankroll. Really, it's a good way to blow up your account. So please just watch, laugh at me, whatever, but don't trade like I do here. At the end of November, my account was at $6,480. I mentioned I would look to Wall Street bets to source some trade ideas. And I even mentioned this. I have my eye on Gamestop, which I may enter into a trade on Monday, but we'll have to wait and see how the market opens then. Now, this was back in November, and I think we all saw what happened in January.
Checkout shares at Gamestop surging another 51% today. The record move driven by a retail rebellion.
So, did I take my $6,480 and load up on GameStop options expiring at the end of January to quickly complete this challenge? Unfortunately, I did not. On December 1st, I did buy 5 GameStop call options with a strike price of $30, but the expiration was January 15th. It moved against me pretty quickly, and I wasn't super confident in the play, so I actually sold it on December 1st for a small loss. But then I decided to try again on December 28th, this time 4 contracts with a strike price of $22 and still an expiration of January 15th. These contracts were $287 a piece. Unfortunately, I just wasn't sure that there would be a squeeze at this time, so I sold it on January 6th for $45 each, taking a loss.
I wish I had a guy in my life that would stop me before I did something stupid.
And this is a good lesson on why time on a contract is so important. If I would have bought contracts expiring in February, sure, they would have been more expensive, but I would have had more time to be right. GameStop did start pumping up around January 13th, but of course I had no way of knowing. If I had another month on the contract, I wouldn't have to worry so much about it expiring worthless, and I could have comfortably held it much longer. These 4 contracts that I bought for $287 each would have hit a high before expiration of $1,915 each, or $7,660 total. Now, to further illustrate my point on how important time is on a contract, let's pretend I bought the same contracts, but expiring on February 19th instead of on January 15th. I could have held in time for the squeeze to occur, and my contracts would have gone from a couple $100s a piece to a high of $35,771 each, or $143,084 in total. The power of hindsight trading. So instead of completing this challenge and making mad tendies, I did the opposite. I'll get to more GameStop later, but now let's talk about some of my other trades. Most were pretty unremarkable, so I'll just cover some of the more interesting ones. My hair is just out of control. Haven't showered in a couple days. I was feeling bullish on Tesla, and since it's capable of making such huge moves, I thought it would be a good play for this challenge. On November 30th, I bought a Tesla $620 call expiring that Friday. This is a risky play because if Tesla doesn't move quickly in the right direction, this contract will lose money really fast. And unfortunately, Tesla sold off more, and I decided to cut the trade for a 30% loss. I tried a handful of plays with companies like Apple, AMD, Palantir, Netflix, and Salesforce. I made a video about support and resistance levels, so when I'm looking to enter a trade, I look at the company's chart, look for support and resistance levels, and then take into account any recent news and current price movement. Unfortunately, most of these trades didn't work out well for me, and my account had bled out to under $4,000. I did decide to try Tesla again, and this time held it overnight. I was able to make a nice profit selling at open the next day. One thing that can be tough when trading options is not knowing whether or not you should hold a contract overnight. One thing I recommend doing is checking out the site Options Profit Calculator. It looks like it was made 20 years ago, but it works pretty well. You select your contract, and then it'll show you a chart of potential returns on your contract based on the day and the price. So if you have a Tesla contract expiring on Friday, and today's Monday, do you want to hold it overnight since the contract will lose value the closer it gets to expiration? Well, here we can see that Tesla is currently at $863, and tomorrow, if the price doesn't really change, we will lose over 10%. But if we think it could pump all the way up to $880 tomorrow, we can make almost 45%. So this can be a good way to visualize the pricing of your contracts over time. Other than Tesla, most of my contracts lost a lot of value and again, knocked my account down. I did think that Amazon was waiting to break out after doing a whole lot of nothing, but since Amazon contracts are so expensive, I decided to do a call debit spread. In this instance, I would sell a call contract with a $3,300 strike price, and then I would buy a call contract with a strike price of $32.95. Now, a normal call contract would cost $8,055. Since I don't have that much, I can sell a contract to open the trade to collect premium and offset the cost of the call contract that I really want. It gets a little complicated to explain, but it lets me take part of Amazon's upside without needing so much capital. If you want to learn more about call debit spreads, I will put a link in the description. I bought 2 of these spreads for $330 total. I ended up selling it 22 days later for a profit of $118, so not the most exciting profit, but it was a good return on my money, and it's a way for smaller accounts to get in on the action of companies like Amazon. Another play that worked out, I bought a put on Zoom for $950 and sold it the next morning at market open for a profit of $290. Now my account fluctuated in the $3,000 to $4,000 range for a while, and then I finally caught another good trade. On January 7th, Tesla was looking strong at market open. After it retraced, I waited for more buyers to come in to give me confidence it would keep going up. When they did, I decided to buy 2 call options with a strike price of $900, expiring in 2 weeks when the share price was $797. Now these contracts weren't cheap. I spent $1,870 on them. But Tesla had a great day and closed with a share price of $816. The strength continued after hours and pre-market and into the next day. So that next day, my contracts were up over $4,000. I decided to sell one of my 2 contracts to lock in some profit. Later in the day, my portfolio broke $10,000, which felt like an amazing milestone to hit in this challenge. When Tesla dipped, I decided to get another contract, this time with a strike price of $1,000, but with an expiration of January 29th to give Tesla more time to move. And this was my mistake. Sometimes when I get a great trade like this, I'll think it'll keep going and double down, and most of the time it doesn't, and I end up giving back some profit. And so that's what happened. Tesla couldn't keep the momentum going, and this contract ended up going to zero. A few other bad trades dropped my account from its once glorious $10,000 to an abysmal $1,000. I'm pretty disappointed in myself. It's clear I should have taken my profits and then reassessed how things were afterwards. Trading does become easier with more money because you just have more options. No pun intended. But you can buy contracts with higher premiums, you can let trades run longer without worrying so much about your balance dropping too low. It's just a better situation to be in, and unfortunately, I didn't stay in the 5-digit club very long. And then the whole Gamestop squeeze happened. On January 25th, I decided to use my remaining balance to buy 12 shares at $98. Gamestop hit a high of $483 that week, and to be honest, I was not paying any attention to Robinhood because I had way more shares in my TD Ameritrade account, and that had all of my attention. My Robinhood account did climb back up to $6,475, and obviously I should have sold, but I didn't. I ended up holding the bags and sold on February 4th for $58.50 per share. That's twice now in this video you've seen my lack of discipline by not taking any profit. This is exactly what you don't want to do. When you've hit your profit target, maybe that's 30% or 50% on a trade, take your profits. Then you can reevaluate the market once you're out of the trade. I don't know what it is about trading on Robinhood specifically, I just have a hard time staying disciplined with it. In my main brokerage account on Thinkorswim, I have a much easier time getting in and out of trades and have had way more success over there than I have over on Robinhood. Robinhood has always been pretty crappy with options trading, and of course their handling of the GameStop fiasco didn't help them out. I may consider moving this account out of Robinhood and into something like Webull, but we'll just have to wait and see. So throughout the past couple of months, when waiting for a trade, I would park some of my cash in Bitcoin. Even though this is an options trading challenge, the real goal here is to make money. So right now I have about $400 in Bitcoin, which has made about $135. I also spent $2.50 on Dogecoin because why not? And now it's up 570%. My overall portfolio is down in the $1,100 range, so I need to trade carefully. I noticed in the past I tend to take a shotgun approach and enter maybe 3 or 4 contracts with different tickers. So instead, I plan to look for one solid, high conviction setup to enter and just take things one at a time like that. In my last video, I mentioned I was going to source my ideas from Wall Street Bets, but since it exploded and has like over 8 million members, I don't think I'll find many worthwhile trade ideas there. Instead, I'll go through my usual list of stocks until I find a setup I like. One other tool I use is a site called TradyTicks. It shows you options flow, which essentially is large orders of contracts that come in throughout the day. There are a bunch of other features as well with some AI tools and other fun stuff, so sometimes before entering a trade, I'll look up the ticker on TradyTicks. This will show me if the big orders of contracts are bullish or bearish, what strikes and expiration dates they are purchasing, etc. There's also some scanners, so you can find interesting trade setups that way as well. You can use some of these features for free, but for all the data, it's $49 per month, so it's probably best if you are a more serious trader who wants live options flow. I'll put my referral link in the description if you want to check it out. So you've seen me give back about $9 grand in this video, so I probably won't do another update until I break 10K or I blow it up completely. But I have yet to blow up an account trading stock options, and I certainly am not looking to start now. Do me a favor, hit the thumbs up button on this video to encourage me to keep this going, and consider subscribing if you haven't already. I'll see you in the next one. Bye.